Welcome to the latest Watson, Farley and Williams webinar. This time we're talking about splitting the Capex pie. And now we're going to allow the people to introduce themselves, going clockwise, starting with Kathrin. I'm hoping, as ever with Zoom, that my clockwise is everyone else's clockwise. So let's find out who we've got here today. So it's Kathrin. I'm not going to introduce myself. You all know who I am. I'm the co-founder of New Dog PR. So the other Kathrin, please lead the way.
Thank you. My name is Kathrin Cockhill. I am the Director of Hotel Intelligence EMEA for HotStats, and we provide operational hotel benchmarking across over 500 KPIs using P&L data.
Thank you very much. Kevin.
I'm Kevin Edwards. I'm the Business Development Director for Alliance. We are the customer experience company, and we help hospitality companies get the most from technology to wow their customers.
Guus.
I don't have the same clock as you. Good morning, everybody. My name is Guus Bakker. I'm the CEO for Europe and the Middle East and Africa for Frasers Hospitality, covering a number of brands, the Fraser Suites, Fraser Place, and Capri by Fraser brands, and a few more brands in the service apartment sector, and also in the UK, the Malmaison and Hotel du Vin hotel chains, with a total in Europe and the Middle East of 65 hotels and service department operated. We do have about 2/3 of those hotels are owned, but we also do have leases and a number of management contracts. So we have a whole range of structures in the group. The group is based in Singapore and has a presence in multiple asset classes across the globe.
Wonderful. Ashley?
Hi, I'm Ashley. I'm the Chief Development Officer of Cycus Hospitality. We are a white label hotel management company, and currently we have across 7 countries now, as of Christmas, 33 hotels. We're very much brand agnostic, so we have all class types of hotels and from all the brands. We do have majority of our contracts are management agreements with joint ventures, some of them, and we also have leases, which were delightful to have them during the COVID.
And Felicity.
Felicity Jones. I head up the hospitality practice for Watson, Farley and Williams, which reaches from the UK and Western Europe to our offices in Asia Pac. We do various projects in Africa and other regions where English law advice is required, and we work on M&A, refinancing, management contracts, franchises, and also helping clients explore Capex requirements and where that fits into the brand requirements. Hence today.
Ah, wonderful. So marvellous. So here we all are. And you'll note that it's been now 2 years of pandemicing. We're now counting everything in terms of pre and post-pandemic for all those people who are looking for new ways to measure time. And in the spirit of things we've learned, as you can see, we all have plants. So we all look more welcoming. Most of us have plants. Good sign. You're judging Ashley or Guus there. And we've also learned new ways to interact with the people who are watching. And so now we're going to run a poll during this particular webinar. Hopefully it's going to appear. That is amazing. So feel free to click on those things. We can't vote. It's very sad. So feel free to vote on those things and I will keep an eye on it. And when things happen, I will let you know what the things are that have happened. I can't vote on this. Can I vote on this? I'm not supposed to vote on this. Oh, and I can't. Wow, rigorous. Okay, right, let's get stuck in. So during the pandemic that we've been recently suffering through, we've noticed that spending money on Capex has not really been a priority when keeping money so that you can do things like spend it on electricity has been something more of a priority. Now we're moving out of it. What has happened? What are the demands of the brands? Where should we be spending our Capex? I'm going to go first to Guus, because it seems to me that prior to the pandemic, the whole hotel stack was all about splitting it down into tiny, tiny constituent parts. Everyone had their level of expertise. You could have 20 or 30 different things that had to be negotiated and dealt with per hotel. And people were looking away from the owner-operator model being very much last year's news. But it seems to me that the risk-reward ratio has been replaced with a sort of risk flexibility option, and that owner-operating is now the place to be. So I'm going to let Guus get stuck in, and then Ashley, who used to work with Guus for fans of autobiographical information, is going to come in and say why everything Guus says is absolute rubbish.
I said I have to be careful what I'm saying here. But as I explained, we have a whole range of structures in our organizations, including, of course, the third-party management agreements that we have across the globe. But I must say that being part of an organization that is considerate and was not asking all staff to be made redundant from the 1st of March 2020 onwards was very helpful. And in terms of building the internal and external customer confidence has been very helpful. I think as a group, we have been focusing on that. And building that trust with our employees over the past 2 years, which has been reflected in I would say, in the results. But of course, we are facing, just like everybody else, the employment crunch across the portfolio, particularly in the UK and elsewhere in Europe. But it is, as a group, we have been able to work when we talk about Capex and where we have to focus. We have a balanced approach in terms of what we need to do on our assets, which are the priority assets, and which are the priority programs in terms of refurbishments, etc. And of course, cash flow was very important in the whole process. Nobody knew how long it was going to last. When we started, we thought it was for 3 weeks, maybe a month and a half. But nobody imagined that it was going to drag on for 2 years. And we are, although maybe in the UK, but not everywhere, out of the cycle. So we, of course, it is, during this time, it has been important. We have taken on a number of projects, despite the cash flow issues, but they have paid off. And so that approach is balanced in terms of, as I said, refurbishment, but also in technology and other areas, change of use of certain areas in the hotels that we have discussed. But as a majority owning company, it's in a way, I think I have had an easier time than some of my colleagues.
Well, we're going to come to flexibility in a minute, but oh, is that me echoing? Okay, I'll whisper. Right. So, Hasley, have you found that it's been flexible where you are, or are the brands convinced that it is still 2019 and therefore everything should just go back to the way it was?
Yeah, I think brands think it's still 1995. Brands have been wonderful. I think brands has been extremely supportive during the COVID, and that's for sure. They have allowed us, adjust operating model as we get along, as we all discover the restrictions, bans, and staffing levels, and etc. Some of the examples, most brands, we have quite a few of these double-decker hotels where we have 2 different concepts under the same brand, under the same roof. They allowed us for a very long time to be able to just operate from one reception, where they always been very, very particular about not allowing that kind of things. However, one thing, of course, for us, both relating to the brand and also relating to COVID's impact is they still bit slow adopting technology that can actually facilitate, make our life easier, let's say, from a technology perspective. So we had quite a year last year trying to convince when and how can we move, for example, to check-in kiosks with the brands, because both from the shortage of staffing and cost versus return implications, having so many different brands already having run this structure forever. So listen, overall, they've been very super helpful, but we're still pushing our boundaries, how much we can get a bit more flexible and relax in certain things.
So what's their problem with things like self-check-in? Because the airlines have been doing it for ages. People like doing it. It saves money.
I think Most of the issue comes from regulations and safety. So, for example, ID, every country and every brand has a different SOP on verifying the identifications and etc. So they have great concerns about safety and security. I think that's one of the things. And secondly, most of the interfaces have not been really tested as the brands have certain special softwares that you need to use, part of their brand standards, BSs, and therefore we had to sort of make sure that that's well tested and tried, and a few other bits and bobs. And for example, some of them are concerned about the service level. So like if you remove the sort of reception and put kiosk, is there, you know, lack of customer service. But actually what they don't think is that reception desks have always been rejection desks in my mind, right? So you come to almost sometimes to a barrier where you have to fill in paper, I have to do this on the computer. It's never been a welcoming point anyway, because you have to do all the admin work. So in our view, that if you put kiosk and actually put and split all your team members, guest service members around there, so where the people do themselves all the administrative work with the scanning the passport, checking in, then your team members available there in person without a barrier, just kind of a shaking, well, not yet shaking your hand, but maybe in the future, but having sort of that interaction a bit more close up, giving you instructions about how to get to wherever you need to go after the hotel or all the amenities and etc. So we believe we will add much more value on the service level. And we kind of are trying to adopt a version where fewer, better paid people on that guest services area, so that we can both win-win situation for guests, for us, and for the brand.
Cool. Well, happy persuading. Kevin, this sounds like somewhere that you could possibly leap in and talk about technology. Do you feel like leaping in and talking about technology? How has the chat with owners and with brands been in terms of introducing it over the pandemic? Because one of the things that we saw obviously ahead of this was plenty of technology, and as Lee said, people had thought about self-check-in, and it become a brand differentiator with loyalty members able to have little keys on their phones, fancy. But now it's all about not wanting to be touched by team members and, you know, 2 meters and preferably some perspex and all that kind of thing. Is it the guest that's motivated this? And does that make it an easier or harder sell into owners, or how are owners looking at technology these days?
Yeah, so it's quite interesting, you know. I mean, for us, you know, we've never been busier, you know, in a sort of period of time. And I think that what we see is really 2 different types of owners that are looking at very different things. You know, you've got your very traditional brand owners that you know, are sitting there with branded hotels where evolution is so far behind that, quite frankly, it's sort of stifling, and it's stifling innovation, and it's driving guests away. I think, you know, the whole brand standard argument of this is what technology should be deployed is well and truly within the BS category, because it is so archaic. What we have seen a real drive for from more forward-thinking owners, particularly around private equity, is actually how they can invest into technology to drive additional revenue. You know, it's not just around containing cost; it's about giving a great you know, guest experience. You know, how do you deliver a greater level of personalization without it being, you know, very much sort of canned, but actually drive that loyalty through personalization? You know, show me that you know me with your guests.
How do you do that? Because people say, oh, you know, more personalization is going to drive that true loyalty where we're actually loyal and it's not all about free stays. But what does that mean? What does that mean, personalization?
So it's really quite simple. It's really enabling.
Well, you say that, but I have no idea. So
yeah, okay. So it's quite simple in terms of actually driving information to the people that matter, which is the team members. You know, you've got great team members that, you know, from a demographic point of view, we're putting systems in front of them that are from 1980, and we're expecting them to engage with it, and therefore we're actually making their jobs 10 times more difficult to engage with the customer because they're trying to work the technology out. You know, give them the right information about the guest that's in front of them, and let them engage. In some ways, you know, most of our work, whilst, you know, we talk around, you know, the guest experience, it isn't really around driving some of the, you know, the flashy, you know, technologies in front of them. it's actually resolving some of the issues at the back of house and actually sorting some of these archaic systems out. There shouldn't be this fear of, oh, well, it's because of all of these, interfaces. It's, this is something which the airlines had going back like 20 years, and hospitality from a technology point has now got to that point where they need to stop thinking, is it just enough? And actually, how do we properly evolve?
Yeah. You mentioned private equity earlier, and that raises all sorts of thoughts about costs, because traditionally private equity and other people with short hold times had very little interest in getting into technology because it costs a lot to put in their mind, and they didn't feel that they were going to get any decent return on it. How do you convince them that if you're only holding this hotel for 5 years, it's worth your effort?
Yeah, it's how IT costs are consumed. It is moving more and more to operational costs. However, we've recently taken a very large private equity firm with a portfolio of sort of 15 hotels in the UK. And the business case is stifling. Through just over 2 million investment, they're going to put 14 million EBITDA on. And suddenly you've got a really compelling business case. You put that on your enterprise value on exit, and suddenly actually investment in technology really makes sense.
Felicity and Kathrin, I haven't forgotten about you at all. I see you on the left-hand side. I'll come to you, but Guus mentioned investing in technology earlier, so I feel like I should ask Guus, what technology have you invested in and why?
We are investing in Allianz, of course. But
of course. Wonderful.
I will get a discount for that. I think, but I personally always go from the principle that the customer who wants technology will bring his own technology. So although of course we do want to keep up to date with what is commonplace in the technology world, we are not going to equip our apartments or our rooms with all kind of stuff that probably will be outdated in 6 months' time, and then we'll have to replace it. So I always give the example that when Frasers started in 1998 in Singapore, we put PCs in every room, which lasted for only 1 year because it was such a nightmare that they had to recruit 5 people to clean all the PCs every day because, etc. You can imagine the scenes, but the customer will bring their technology if they want to bring it. Just like at home, some people are full of gadgets, other people, they can't be bothered to have gadgets. And so I think that is important to understand. So we are investing, we have invested in a new website, but it is the booking process, the seamlessness that is important for the customer. How quick can I make a booking? Is it going to take me half an hour to go through 20 steps to make a booking, or is it, and that is why booking.com is so successful, it's a 3-step or a 4-step process, and the next time the guest will be known in the system if he or she wants to be known in the system, and then it's all much faster, much quicker. And that is what we are focusing on, is the customer experience rather than tools and kits in the room.
Cool. Felicity, when you're talking to owners, do they look down their contract and see, where does it say I'm going to have to spend 68 billion on technology? How do I address that? Is it really necessary? Is this a concern? Or are they thinking, no, I can see that the seamless reception is something that I'm eager to embrace in my investment?
It very much depends on where they are in their cycle and how much they've suffered in the last 2 years. I think we recognise that the brands have been accommodating in allowing Capex reserves to be used for other things, but the brands, and some slightly more than others, are going to be very keen to make sure that their properties, well, provided they've got the staff to police this, to make sure that things are back up to spec again, and that may be the physical property as much as the IT side of it. I think there will also be IT costs because the brands are, quite rightly in my view, looking at whether it's the IT to drive revenue or it's ESG or a number of these things where they will be driving cost. So the owner will have to be prepared for that as well. And so it depends on the type of owner. It's interesting that private equity is now looking at this on a different basis, but when you're looking across 14 properties, it's a very different prospect than looking across 2 or 3. And it's still very much up in the air as to where the investment focus is, because I think people are still, there is a move. I think we're probably past what might have been distress into stress, as we've spoken about a number of times. But there will still be stress in the system, and will still be, where is the money coming from? But there's a big recognition that with the staffing issues, IT investment is going to be essential. And I still have a difficulty. You've got to bear in mind that some of your IT systems are tied into the brand. So it's interesting to hear Asley's view as to where that if you're operating with several different brands, where the difficulties can come in. And some of them can strip out everything if you weren't with that brand. So if you're going to spend, the best would be to future-proof. And I think there is still some movement to see what happens with the brands as we go forward.
Yeah, I think one of the interesting things that's happened with the brands, particularly brands like IHG in recent years, is that they are now developing their own technology, and then that becomes mandatory. Obviously, that's part of the package, and you can't have that option, it seems to me, people can correct me, to say, no, I'm going to have your flag over the door, but I've got my own solution, which is much better. Kevin, maybe you'd like to talk about that in a moment. Kathrin, we are going to get to you. We are. We're almost there, because we're talking about costs, so they veered away, but we are. But Asley, how have you found all the different technologies?
I was almost talking about on the mute. Yeah, I mean, the different I think everybody knows that there are certain suppliers currently in the market, or they have been on the market. They have a monopoly, which is driven by that brand technology or certain requirements of the brands can only work with that provider, and that's really also one of the issues we are facing with the upgrade and getting to the next level of technology in our hotels. But let's put that on a side. I think in the positive way that we're seeing a lot of progressive technologies, cloud-based systems that are coming. And I believe Felicity mentioned that, or Guus mentioned, but I can't remember who did. A lot of them is going to basically both improving the guest journey as well as making our employees' life easier, faster. I think one of the biggest investment we did over the past 2 years, utilizing the sort of the quieter-ish times, which was a project already started, but obviously the data warehouse and BI, business intelligence, or I call it the black box, that all these different technologies are basically interfacing into it, and then whoop, everything comes out on your app or in a beautiful report that we have much more detailed review of everything about our hotels, customers and employees and numbers journey. So we've been heavily investing on that, because as you know, slowly, or if not slowly, we're already there on this whole data pollution, right? So we have data coming left, right and center with many different things, again, about the customer or about your business, about your employees. So trying to synchronize all this data output and actually make something, an outcome that is has a meaning that we can read, understand, and action to improve the quality of whatever it may be. And that's our focus has been, and our CFO and our IT director has done great job on that. So I'm really pleased to where we are taking the technology, brands permitting.
Yes, it's interesting you mentioned the cloud, seeing as that Accor has recently kicked off its cloud PMS wall, which is having, as we speak, which is very entertaining for everyone involved in it. PMS for every season, it seems. Kathrin, right, we have a number of interesting things that I want to ask you, so I'm gonna make you suffer through all of them at once. Felicity was talking about stress or distress. Is it stress? Is it distress? Is it going to turn to distress? We've been talking about the quarter of reckoning for the last 8 quarters now, and it's becoming very tedious. Obviously, no one wants to see distress, very sad, but very good for deals, which is always very interesting for the sector. Are we now seeing distress now? We're in this kind of critical 60 days at the start of the year. And costs. We're going to have to talk about staffing, because it's in many ways going to be encroaching on Capex spend now that people are having to pay people to stay in their jobs, which didn't seem to be the case before in hospitality. But now apparently you have to pay people more to make them stay because they've seen another side. So Kathrin, take it away.
Yeah, so thank you. I mean, there's so many different things I could talk about here, but I thought I'd keep it to 3 key areas. We have a bit of a unique vision of or view of what's been happening through the P&L, and those 3 areas really are what's happening with conference and banqueting space and the revenue opportunity per square meter. You know, what are we going to do with all these empty conference rooms? How much longer are they going to be empty for, and how long can we wait until we do something with them? Lack of labour, we've talked about quite a lot. Interesting that you know, from Kevin's point of view, talking about the importance of tech to guests, but also it's a really important area for the new younger generation to draw them into our industry, because that's what they're looking for, and it's a real reason to join or not to join, depending on how we move forward with that. And that also then goes into, you know, you're talking about ESG, but also, you know, green technologies and how green the hospitality industry is seen to be becoming in the future, because that will be a real reason for the younger generation to join or not. So yeah, lack of labour, particularly in housekeeping, with 30% back in or rather growth in some reasons in the cost of housekeeping labour. There are some tech options there, and then the high growing cost of energy is we haven't talked about that yet this morning, is a massive growth area. It is already much higher, and we're looking at versus 2018, where we had £4.62 per available room versus occupancy of 85, 86%. Now we're at sort of the 58%, and we're already back at that 2018 level of cost of energy per available room. So, you know, those what can we do around that with regards to investment that's going to help mitigate some of that. If I just go, I'm not going to talk about all of those things because it would take too long, but if I talk about the conference space and the space within hotels and the opportunity to look at leisure business opportunity and the ways that you could that hotels could consider changing their use, maybe not permanently, because, you know, that's we're all hoping that corporate and conference business will come back, but maybe not until 2023, 24, in you know, if we're still going back to 2019 levels, but to take advantage of the space in a way that perhaps doesn't require a lot of extra labour, but are things that will draw guests back in, and maybe help that particular property to stand out. And that might be things like indoor gardens, I've heard talk of, cinema rooms, indoor activity space, all of the things that appeal to families and leisure guests that are something that they might not get somewhere else, because otherwise that space is just sitting empty, and it may be an opportunity to grow some revenue in an area that you haven't perhaps before. It might also be leasing that space to a potential shop or to local boutiques, something that again will bring guests in. They will spend money. They might then spend money in the F&B outlets. So, you know, those are all areas that that hoteliers can consider, and it does really need a bit of creativity and a bit of bravery to think about that space as an opportunity, rather than it's sitting empty and I just don't know what to do with it. And anyway, I haven't got the sales team to go out and drive it, because that's another big issue.
Guus, Asley, have you been creating indoor gardens? What have you been doing with your flexible space?
As long as the flowers are not plastic. But we have not been creating indoor gardens as yet, but of course we are looking at reallocating, as I said earlier, reallocating that's some of the spaces for different uses to accommodate the demand of the customers and less demand in other areas, in particular, of course, the M&E part of our business. But I'm sure that Ashley, she used to have a beautiful garden. I'm sure she has created a lot of green spaces.
Yeah, well, we you know, Kathrin, we have actually took over and opened 14 hotels since October 2020, and 9 of those hotels were our hotels that were under construction. So it has been interesting planning and building hotels for in standard times, let's say, pro-COVID, and then opening all of them during the COVID. One of the things for us is we didn't much change. One of the things, and I'm sure Guus, especially with the Fraser product, has seen that our extended stay product on itself really landed on a very COVID suitable product. And sort of in all of those properties, we really didn't have to do any enhancement or any change per se, because just on its own remit, it's a very safe environment. On our full service hotels, it's sort of creating with more safer and more separated areas, and trying to provide every week changing food and beverage offers every week, different regulations. That has been challenged, but again, our teams has been very resilient, adopt and change and figure out a way how we can deliver those things within the current envelope of the buildings. But we have lots of greens, that's for sure, indoors.
Oh, you're all set then. So that leads me seamlessly on to ESG, which few people have picked up on. Felicity, have you seen, you mentioned ESG, that implies you have something to say about it, which I'm very happy about. Have you seen this creeping in? Because there's no doubt that it's creeping into the mind of the guest, and even more important than the mind of the guest is the mind of the law. And it seems that legislation is coming in certain jurisdictions, which means that we'll all have to be thinking about ESG, whether we give a damn or not. So how have owners been looking at ESG, and what have you seen creeping in?
Well, you've seen it everywhere in the stack, really, because you've got the investment funds that will have certain green or sustainability criteria, and there is a difference on the sustainability from the green, where the green is harsher, if you like, which is I suppose the overall aim. But in terms of sustainability, there are issues for the funds, there are issues for the banks. Some of the banks are being very specific in their requirements as well. And also some of the landlords. When you're looking at the bigger estates, we've seen some slightly unrealistic approaches to the compliance with all ESG requirements by, well, they wanted across the estate, so they wanted across different classes of hotels that happen to sit within the same band, whether it's a council or any other authority. They would have probably even more rigid requirements than the pension funds and the investment funds. So it is going to have to be factored in. It is something that I think the brands are helpful on, because they're ahead of the game on it, and indeed should be ahead of the game on it. There is a lot to be done, and it's inevitably going to create cost. And you've got to bear in mind, if someone's staying in a 5-star hotel and they want their linen changed, they're going to push to have their linen changed, and you're not going to turn around and say no. So it's managing, it's educating the consumer as much as educating the owner. And I think that's where the brands can help, or where a portfolio approach can help. It's going to be more difficult for an individual owner.
Yeah. And where do these, because we enjoyed a lot of chat about the brand requirements for ESG before the pandemic, and we all remember that there's no more tiny little bottles, so you can't do that thing where you go, look how big my hand is, which is a huge disappointment to all those people who stayed in those hotels. But since then, the laws are changing. Where are you seeing the brand requirements stacking up against what will be law?
They are, well, the difficulty is with the brand requirements is they're going across multiple jurisdictions. So it's a question of timing as to when things come into different jurisdictions and when owners can be pushed. Ideally, there should be something more cost effective to be refilling things rather than to have loads more plastic bottles. But at the end of the day, there's still a long way to go. And there are certain brands that are being very eco-friendly at this stage. But I think that has to have an effect in cost. And there will be a lot of product actually in the physical buildings that are it's going to be incredibly expensive to make them more efficient. And are they effectively redundant? Are they going to be repurposed? So there has to be a balance. It's a bit like the age-old planning, where you've got a beautiful building and you want to do certain things to convert it, and the planners don't want you to. But on the other hand, it's never going to be a cost-effective building unless you do. There's a parallel in ESG with those issues. So I don't think we've yet had enough time coming out of the pandemic to see quite how rigid the brands will want to be. Of course, everybody wants something fairly instantly, but I just think balancing the cost against the requirements, it's going to have to be a process.
Something that I was listening to an architect on another webinar, other webinars are available, the other day, talking about how the pandemic had changed the luxury relationship with ESG, and that when they were building now, more people wanted more balconies and more fresh air, and there was less enthusiasm for air conditioning and things like that as a result of people realizing the value of fresh air. So there were opportunities there, which was interesting. They also talked about how they're now refusing to knock down buildings. They will only convert buildings. And we all know what a special nightmare that can be. So Kathrin, energy costs, ESG, are they all coming in together in people's minds and seeing the value of investment?
Yes, I mean, definitely. And just to pick up on that point about older buildings, I mean, there a lot of the older building stock in the provinces has no what you put on your windows, draft exclusion and ways of keeping the heat in, and that's obviously an area for investment that's going to really have an impact on how much it costs to heat a building. These old buildings with huge high ceilings, very, very beautiful, but really, really difficult to heat. And there's a huge cost that literally does go straight out of the window. And
that slightly depends on whether the planners will let you do something to your windows that's worth doing.
Absolutely, that as well. So that's the purposing issue, isn't it? But then there's also other things to look at with, is there ways of making the lighting cheaper? LED hasn't gone all the way through yet. And then there's also things like occupancy-based thermostats, so that the heating only comes on when somebody's in the room, and when they go out, because they might not have taken their key out, where they've left the room and shut the door, the aircon or the heating goes off. Those are all ways of perhaps reducing the energy consumption and reducing bills. It's a very current and growing problem. Yeah.
On that one, actually, I don't know if you guys are familiar, but the brands has been changing their brand standards on the key card slots. Actually, the key card slots that you used to put your key when you arrive, it's now being made redundant, all of the new hotels. And there are two reasons. One of them is obviously people no longer going to use this plastic or paper or whatever format they have the key cards, because they're going to use mobile check-ins and mobile RFID cards on your mobile. Basically, you don't need that. So that's going to be something when you check in on your phone, you're just going to be able to go straight to your room rather than picking up a plastic card just for you. And the second thing is, of course, from the ESG perspective, making that redundant and connecting your FCU fan coil units into basically your air conditioning units into your BMS system that interfaces with your PMS system. So a slightly smarter technology, which most of the hotels since 2000s have the BMS building management systems anyway. So just linking that with the PMS, you're actually getting around a better efficiencies on that. It's switching on and off the cooling, heating, etc. So I think brands have been already taking those certain steps in towards the sort of behind the scene ESG things, not just always the amenities and etc. or how often you change your sheets.
Don't you think that also adds into an argument I will frequently have, that the PMS and all that's in it should remain with the owner at the end of contract, particularly as it becomes more sophisticated with everything that it's linked to?
If you're the owner, the PMS and data is always yours. So if you have a management company in place, they cannot, and if it's in the brand, they cannot and have no right to take it away with them. The only scenario is if they are leased and you haven't do the demarcation properly between the operating equipment and computers and the owner demarcation, then yes, they can.
There is a slight distinction between what they can strip out on some occasions, and you could find more information than you could wish to, is technically owned by the brand. So just throwing it out there.
Yeah,
that's your nodding, and then I've got a feeling Kevin probably has something to say about PMSs. Gus?
On the ESG, to come back on the ESG, of course, it's going to be a long-term game. We all know that most regulations, it's only once it becomes law that companies and corporations will really be forced to implement it, then we will see the things moving. We know that building an eco-friendly hotel is probably costing 35 to 45% more than building a more classic hotels according to the current norms. So at the end of the day, unless corporations or builders are being forced to build with certain standards, here's the BS again, but with certain standards, it will probably not happen straight away, and it is going to be a long-term game. And at the end of the day, the consumer has to be prepared to pay for it. We have to put our money where our mouth is. We can't say everything needs to be green, and we know it's more expensive, but actually we don't want to pay more for it. So that is the key question in this whole equation.
Yes, and I think that's to move away from that for a second. If anyone who saw Whitbread's results last week will realise that the consumer is going to pay for this is very much going to be the theme of the coming year in all ways. So Kevin, PMSs, any thoughts, or not an area you're interested in?
Yeah, no, it is definitely, and I think this sort of, if you like, it is the catalyst of most of hospitality's problems from a technology point of view, is that everybody's centered everything around the PMS, and you know, the PMS ultimately is a property management system. It's there to manage the inventory, but for some reason we seem to be shoehorning all of our guest information into the property management system, which frankly is ludicrous. When, you know, if you had an outsider say that, how would you design a system? You wouldn't put all of your guest information in a property system. And so this is where, you know, this evolution, you know, certainly at a large brand level, you know, needs to occur. And you know, completely right to say, you know, the building management system should be linked into, you know, the occupancy of the hotel, so it needs to connect to every other system. But all of these very old systems that sit within these very large brands tend not to connect, or they connect at such a cost. Actually, it's, you know, it's not economically viable to do. Interestingly, we're seeing, you know, organizations now really, you know, with sort of the finance behind them, looking at creating their own brands, and actually sustainability is top of the list. You know, building it with sustainability in mind, you know, whereby actually you can make the consumer and the guest aware of what their utilization is. And, you know, there's a lot of, you know, conscious people out there that actually want to make a difference. And, you know, by giving them the ability to select whether they have their towels changed every day in a luxury property, people will actually choose different options, but you need to be able to give them the choice. And that's really what's lacking. So when we think luxury, we think you have to change the towels every day. But actually, maybe the guest would rather decide on that. I think, you know, and sort of moving off sort of PMS in the ESG front, I think one of the challenges which we see in, you know, is the collation of data around ESG, to be able to report back, because yes, it's all fine and well going and building and constructing a new building and meeting certain, you know, environmental standards, but actually there's an ongoing piece as well, which is just as critical, if not more critical, in terms of how you're operating that hotel in line with, you know, standards around, you know, social and economic, you know, standings, etc. And as an industry, I think there needs to be a commonality in terms of one standard. You know, whilst, you know, you've got all of these different brands, there isn't really a set standard that everybody is working to. And I think that's probably one of the challenges everybody faces.
You've also got the challenge with the global spread on that one, because I've been working with a client who's it's not hotel sector, it's more advertising related. And they're looking at how you can implement a reporting structure so they can start to gather the information as to how the industry works in different jurisdictions, with a view to it's reversing. It's not just going to zero, it's reversing and putting back in, if you like, as some of the Microsoft are trying to do, to go to negative, which I think is very difficult in this industry. And I do feel a lot of sympathy for the architects at the moment. If you're designing something at the moment, what's the longevity? How long is your client expecting this to be operating. It's really tricky as when you're looking at the changes, and today being in the office in the city, you're seeing buildings come down that were put up 25 years ago, which doesn't seem very green to me.
Kathrin, this all sounds like a benchmarking question.
Yeah, certainly from a not just the revenue, but from all of the cost point of view, absolutely. Yeah, it's being able to monitor not just what's happening in your hotel and for your hotel group internally with that internal benchmarking, but what is going on in your own competitive set. And that set might not be the hotels immediately around you. It might be an aspirational set because you need to change. You need to change the way your business is set up in terms of its segmentation, and you need to be looking at other properties that might be similar to that, and that benchmarking gives you the opportunity to see what you need to do, and then how are you actually doing against that particular comp set. Yeah, I mean, in our industry, we've been fantastic at looking at RevPAR and everything that goes with that, but it's the only industry I think out there that doesn't look at down to profitability and look at all of the costs and then draw in all of those people in the hotels that are working there that impact all of that, impact conversion, and not just the revenue generating, but everything else that goes underneath that. And it's a mission, isn't it, in life, to try and get everybody involved, get the general managers and the owners to include everybody in their teams to talk about this stuff so that they can all have an impact and take ownership.
And talking profitability, and as a conscious person, as Kevin noted, I have noticed that we have a question from Rod, which is most welcome. And he is talking about working from home. It's the thing. Many of us are doing it even as we speak live. And surveys have suggested that companies will need less permanent office space because like save money. And hoteliers, of course, have leapt into this and offered flexible space. But is this realistic for option for hotels or not? If it is, how can these needs and opportunities be best described? And if not, are hotels being misled in the idea that we're all going to be having all our office space in the nearest hotel? Asley, and then Guus.
Yeah. Look, listen, I think one of the things that this whole phenomena about working from home, and that the hotel business is going to completely collapse. That was sort of, I think everybody was thinking, if everybody starts working from home, is the hotels going to collapse? First of all, that was never going to be the case, because anyone that works from home, and if the hotel is next to their office, those are never been the customer of those hotels because it's only the people who don't live near their office actually traveling and come and stay. So that's one of the myths that I think we all get through. I think having seen as soon as any restrictions being uplifted and sort of different lines of businesses, they just desperately need to be back in the office and they want to work together. They have better productivity, but also better working environment, better tools than just being cramped in. Some of us have obviously probably have a very comfortable lifestyle, but probably the minority. So if you look at the office workers, and they all live in a very smaller places, and they can't afford a massive additional extension to their flat or house for an office. So those people are all going back, and we've seen this happening as soon as the restrictions are being lifted. Is the hotel lobbies are going to be the next offices? Well, we've been experiencing this with the millennials anyway, with all the sort of the startup and IT and sort of technology generation. And I think Hoxton was the leader of this. And eventually we all start calling some of these people as lobby lizards and etc. And likes of Citizen M start putting already hourly rental for their tables on their lobby areas for those people who's working. So this was around. I mean, this is not something that is going to come back straight away just because of COVID. If you look at the 2017, 18, 19, that was already coming. And hotel brands or hotel owners, we all been very mindful of these people. There are more startup companies, there are more individual workers that are not actually part of a big office, so those people always use the hotels or coffee shops, and we always keep that in mind in our design on lobbies and etc. But I haven't seen, having built so many hotels, and this year I have 6 hotels under construction today, and we haven't gone out of our way to make it, oh my God, our lobby is going to be hammered by this office workers who can no longer, or who will no longer go to office. You just pick the right balance about the footfall of your location, who's going to be your business drivers, what the demographic of your customers, and then you design your lobby always according to that, not just according a twitch on the graph of what's happening in that today's socioeconomic perspective.
Yeah, I would say there's not, hotels have always been offering space for a certain flexible period of time. We have launched even before the pandemic in our meeting rooms to create small meeting pods of 2 to 4 seats where people can come in for the day, have a few meetings, have a few discussions. What we see today is, in particular in UK provincial, is that people, and of course a lot of people have moved away from the big cities. We're talking tens or even hundreds of thousands of people that are not coming in, but can still afford to say, I don't want to work from home, but I want to work locally. Because I need to set up a meeting, I need to have a screen, I need to have silence around me. I can't have the rest of the family interfering with what is happening. So I do see that happening. We do see that happening in our hotels, but so that those smaller meeting rooms, I think, is very important, and we see them popping up a little bit everywhere.
Wonderful. So I see time is ticking on. Do feel free, anyone, to ask any questions, because this is the chance. I can't do it later. It would be weird. We haven't got round to yet PIPs, and I do like to talk about PIPs almost as much as I like to talk about leases, but we've already talked about leases, so we'll move on. And the value therein, because it's great that people haven't had to deploy as much Capex as they thought they were going to have to, but if you're thinking of selling, or you're likely to be forced to sell, given the quarter of reckoning, what happens with PIPs? What happens if you haven't invested? What happens to your value? Felicity?
Well, it's inevitably going to have a significant impact, because the whole point of Capex is to retain your value. So the difficulty will be if, it depends on the buyers to an extent, and it depends on the brand. But in some cases, the brand have a right to insist on a PIP before they would agree to a transfer. So that's inevitably going to affect the price at which you're going to market. And there's still a big mismatch in pricing at the moment, where a buyer wants to take into account the position and how long it may take to get back to pre-pandemic trading, and a seller is thinking, well, I've got this amazing product, and therefore it should still be of a high level of value. But it's undoubtedly very difficult. It's I've noticed where the brands lease, they can be quite tricky about whether they maintain the investment if it hasn't suited them at this particular time. And where there are management contracts and franchises, I am concerned that there's going to be an excess of PIPs. I do think there is a difficulty in staffing in some of the brands, which might mean there's an extra time delay and an extra breath for some of the owners. But certainly if you're buying, and particularly if you're private equity, you're going to think there's a value add I can do here, and I can look at the Capex, and I can possibly do pretty well over the next couple of years if I'm prepared to make the investment. And I buy at the right price. So inevitably, it is going to be a trickier position. And at some point, the banks are going to look at at their lending and be less accommodating than they've been over the last 2 years.
Yeah. Asley, where do you invest to be able to continue competing like this? I could see thoughts coming out of your head.
In the investment world, you mean? Sorry.
Where are you deploying your Capex to make sure you're having the greatest impact?
Yeah, sorry, Capex. Well, as I said, I think technology has been the greatest one, right? So technology, everybody says that. Luckily, majority, or almost, I would say 90% of our properties are all built, let's say, after 2000. So they're all relatively new. And especially the ones that we've been building for the last 10 years, they are all BREEAM excellent or higher. Just on that note, perhaps it's worth mentioning, we have built and open and running the first BREEAM in operation hotel in France, our 2 Hyatts in Charles de Gaulle. I can't say anything yet because I don't have year-on-year comparable data yet, because we opened in October 2020. With the COVID, of course, we just need a full year. But just sort of those are the areas either during construction or at the opening that we invest our time and effort as a Capex, I will say. And of course, our objective today in the slightly older hotels is to prioritize is at high priority, high impact, and the high priority in usually your fire, life safety, local regulations, and guest journey and employee journey, and that also has directly a high impact onto your business and etc. So in every property across all 33 properties, that's what we are approaching. And of course, because we are in 7 different countries, obviously we also kind of have to evaluate what's the new jurisdiction, what's the new coming up legislation, regulation on that particular jurisdiction.
And I see we have 1 minute and 2 questions. The second question, Tim, I can answer by looking at the poll, and I will. The first question is from Richard, and it's about older independent hotels and ESG. Seeing as none of us here are representing older independent hotels, Felicity, do you see the older independent hotels lagging behind the brands and bigger groups as they lack access to advice and help on ESG issues?
Oh, I think the ESG industry is growing apace, and therefore there won't be the lack of access to advice. As with anything, it's finding the right advisors that you can work with that have not only an understanding of the requirements, but an understanding of budget and timing and the concerns of the owner to get them there. So there's not necessarily need that they should lag behind. I am concerned about the potential costs of bringing certain buildings to the standards that are going to hit them in due course.
And for the final question, Tim has asked, I appreciate the hospitality industry is still in survival mode and we will be some time. In the meantime, do we invest in IT or ESG? I will not ask the panel. I will instead ask to see the poll to see what everyone thinks we should be investing in. And we, well, that's nice. So where should Capex be directed this year? We have deferred maintenance, very glamorous, very popular. And where does ESG pop in? Did we not have, oh, okay, other, no, nothing for other. So technology, very popular. And yes, adapting F&B. In fact, adapting F&B, 7%, deferred maintenance, 38%. I'm aware that if you're watching this on the recording, you can't read this. Health and well-being, that might count, 8%. Regulatory activities, yes, 5%. Repurposing conference space, 10%. Technology, 33%. So to conclude, probably ESG when it comes down to it, because that can save you costs as well. I'm going to take the majority decision there on my own, as all good dictators should. And in the meantime, I would like to thank, oh my God, that can't surely be another question. No, it's fine. I would like to thank my panel today for what has been very gripping and lacking in BS, thrillingly. Particularly like to thank Hazley for reception desk, not rejection desk, which I will be liberally recycling to the benefit of all. Thank you very much and see you next time.